The Aussie dollar is changing hands for 66.9 US cents and less than 100 yen for the first time since early September. It has been trending upwards for 12 months, mainly because the Reserve Bank of Australia has been out of step with the US Federal Reserve, holding rates steady while the Fed got ready to cut and then it cut. But it's been in reverse lately because it looks like the RBA is going to join in the cuts and because commodity prices are falling, as they did last night. Oil fell because Israel said it won't target Iran's oil facilities, and iron ore fell because exports from Port Hedland hit a record high in September, and from Brazil, they were the second highest on record. The result was that as well as falling dollar, mining and energy stocks fell on the ASX, leaving the main index 0.5% lower, despite gains by the banks. And the falls here followed lower prices in New York and Tokyo, while Chinese markets recovered a bit. Now, the RBA published some work on inflation today, which contained this interesting graph. Well, their chart showed expectations and perceptions only. I've overlain actual inflation as well for comparison. And right now, inflation is 3.8%, but perception and expectation lags reality. It feels like about 9%, according to the RBA, and is expected to be 5%, which is why everyone's not happy. And finally, the ABS published its annual data on births today, including a chart of the fertility rate, that is, average births per woman, which has fallen again to 1.5 from 1.63, even further below the replacement level of 2.1, which is what would be required to keep population steady. And that, of course, is why we need immigration. And that's finance.